Hey, it's Mack with PriceActionTradingSystem.com, and it is Tuesday. It's June the 3rd. This will be our chart lesson for today. And it's been a really slow and there's not much happening today. And it's almost 2 o'clock. I'm just now actually finishing trading. I actually finally exited this trade right here, or actually I had a runner going right here. And I was trying to uh, get my an extra tick or two here. I really thought we were going to go higher, and we just couldn't do it. And so in this bar, I almost exited on this bar, but I waited till this one. But I had some runners going that were off of this move up here. And lately we've been looking like we were going to back up and go higher. So I really thought we would probably test this high from yesterday. This is a 1924 or so. And I really thought, and we may test it yet. We're not done here yet. But we did have this channel working out. We got a break and we got a couple of legs up, and we could not get through 1923. It banged off my order uh, many times. I just wasn't going to risk it anymore for an extra couple of ticks. I was looking to maybe get another point out of it, and I just wasn't going to risk it. So I had a nice profit, but that was the reason I was trading late today, because there just hadn't been very much going on. And if you caught this move, you might have made some good money. That was really the best move of the day. This up and it's back down, but I didn't like this trade. I didn't see a good way to get in it, and I think it's really dangerous. So I did not take it, and I missed it. And there was another good move down here that's a little easier to catch. So, but let's talk about the trades. It's not going to be much to it today. There's just not much to talk about. This is a trading range, and the lows are 1917 area. And the highs are maybe, we may call it up here now at 1922. So a 5 point range, you just can't do a whole lot with that other than scalp a few ticks here and a few ticks there. And but that's why we have this strategy. It works whether there's a trend or not. And it's looking like I made the right move of exiting that trade, or it would have given back a lot of my profits there. So. But generally, these breakouts fail, but lately they continue to test the new highs. And so I probably was taking a little chance looking back on this. I probably was being a little too aggressive hanging on there. Um, I don't really think you want to go short right there, because there's actually a little bit of a channel working up there. So, I was kind of sitting there hoping and thinking, hey, well, maybe we'll get a spike up in a little channel that'll keep going, but that didn't happen. So the range is taken over, and for whatever reason, there was just a lot of selling right there. They were protecting that 1923 mark. There just wasn't any more sellers come in. I bet it banged off my limit order, well, at least on 3 bars, but I bet it banged off of it 50 times, and I couldn't get filled. So that's not a good sign. So. But let's talk about the trades. There was a second entry short right here, but you got this. This is real choppy looking, and you kind of break out of it. I mean, look at this. There's just not much volume, and it breaks out. And this sets up right about the open, just right before the open. It was really tempting to go short. If you did go short there, when it turned back up and went down and bounced again, you got to exit. I really did not like it, because this is the kind of place, this looks very similar to what we've been seeing every day. Right here it is. Right here it is. You see it here again. Repeat patterns, you'll hear me talk about those. They're usually better when they're in the same day, but when you start to see a pattern setting up like that, you got to pay attention to it. And it was really tempting to go long here on the second entry long, but it just wasn't a very good setup. And by that time, there's just so much overlap. It's real obvious that this is kind of congestion. Somebody else sent me their chart, and they asked about going long right there. I can't remember if they asked about here or here. I liked it here, because now you've kind of got, this kind of confirms your trend line that you got the first couple of swings here. We touched it here, and this just kind of reconfirmed it. And prices, it's so close right there that I don't know if you'd call that a close outside, because it could be right there. And that actually fits fairly decent right there. And at first I thought this was actually a midline and we may go higher because we broke higher. But when we broke higher here, um, if this turns out to be the channel here, which I'm guessing it was in the end, so we really, this should be, um, so I'm going to turn that to solid, and I'm going to get rid of that one right there. So I believe this was the channel working up. We had the little double top on the failed breakout. We tested it again, but you don't want to go short below that bar. So you might have thought about going short right there, but I didn't like it. That's just too much congestion right there, and it looks too much like this right here. So you get trapped, and then it turns down. It never turned up, but I was afraid it would turn down and bounce off the trend line and maybe go higher. Um, but we weren't really back to that trend line yet, and so there's always a chance it just bounces down. But this overlap is, I mean, this overshoot here is a little bit telling. But at this point, you still couldn't rule out that we'd bounce off this trend line and get up into the upper side and go, and go up into the upper side. That's what, it's until you get more price action with just this one overshoot right here, it's hard to tell. Generally, an overshoot will lead to a reversal unless it just is the first indication that you may go higher. But for us to go higher and this to be the midline, you really needed a bounce here off the trend line and for it to hold and to get a nice rally up higher. And that didn't happen. So that's telling you that, hey, we got a little trend working down now. And so when it went on through, but by the time it goes on through, it's too late to enter. That's the problem. And so you don't want to go short down here after we just came off the low side, and you don't want to go long yet. You might have, I could see some traders wanting to go long there, but I don't think you can go long in here. And then you get a failed second entry long. It's not really a second entry long, but you get a little double top right there. Let me get these out of the way. And it turns down. If you did go short here, it's not a very bearish bar, and there's a lot of overlap. If you did go short right there, but it's right off that trend line, you got to use a limit order. And I would have tried to get a tick or two back in, and you could have gotten filled all the way back to one tick from that high. But when I saw that close, that maybe had me second guessing what was going on, but it did turn down. And when it turned down again, now you got your little close outside. But I liked it really to the downside then, especially after seeing that leg down, because that's one leg and then you get another leg. And if you measure those two legs, I never measured them, but just eyeballing them, I'd say those are probably going to be measured moves. And you can see that's two perfect measured moves. So this one was a little more risky, but still a reasonable trade. I went back and forth whether or not to make that one green, and I really wanted to. But if you're paying attention to this channel and you see it, you've got two failed attempts to go higher, a double top. Just try to use a limit order there, I think. And on this one, I just use a stop because they trap some longs right there, and boom. And that's why it falls off like that. You got a bunch of people trying to get long that remember this pattern and this pattern and this pattern, the same thing that we just talked about being aware of, and this time it fooled them. But if you're paying attention to the trend lines and following the rules, you can't go long right there against that trend line. You got to and you get your close out, your new low, and then look, it's rallied all day until, 2 o'clock or so, 10 minutes ago. So, and now you can see I really made the right decision of not hanging on for that one tick, trying to get a few more ticks, an extra point. I probably saved myself a couple of points. I mean, we still could get that new high yet, but we're probably going to get back in this range. And there is a midpoint running across here. I don't have it on here. It didn't come into play enough is the reason, but it's here, and you can see it right there. And that was another reason when you put that on there, you can see what's happening right there. That's the reason you're struggling to go higher. And when you got them both working against you, so maybe I should have put that on there earlier because that definitely makes it easier to see. And that's the reason I'm always telling you, make sure you draw your lines, because sometimes it doesn't. That looks much different without that line there. Look, it just looks like we are making slightly higher highs until you make a double top, and then you make that double retest. So that's enough reason to go short. But when you put that on there and you realize, hey, That's resistance on a midpoint, and you definitely don't keep you out of the long. That would definitely protect a lot of you from the long. Um, and then you get the nice drop down for the short there. So yeah, that's why I tell you put those lines on there because they can make it look totally different than when you're just eyeballing it. I've gotten to where I can just eyeball it pretty good without a lot of these lines, but I've found that by drawing them, I tend to do a whole lot better. Don't ask me why, but it does tend to be easier to see. So, but anyway, you get the drop down and you get the close just below, and look how bearish it looks. You got a little, I mean, this was really bearish. And if you didn't enter here, you can't enter. And then you get the, so now you got to close outside a new low, but this probably trapped more people to the short side now because what happens is people see this big move down and they saw this one and they missed it and they're thinking, I'm not missing this one, and they start entering right down here, not having any, not knowing any better that you can't sell near those lows because you're probably going to get trapped. And the only reason I drew this one green is because there's not a really good setup here. You got this bar and it's got a lot of stem at the top, and then this is just a little inside bar. If this little inside bar would have been right at the bottom and you got to go long right there, I would have liked it better, probably made it blue then. But because it's so close to that high, there's still plenty of room to get out, but I just didn't, I think it's a little bit aggressive. And but I'm going to say this, and a lot of your aggressive trades are gonna be your best trades. Okay, sorry I had an interruption, but a lot of your aggressive trades are going to be your best one. These always turn out to be my best trades. They're, you know, your heart races a little bit and your palms get a little sweaty entering in places like this. But I'm going to tell you, it really changes things, and they're some of your best trades. And you know, I don't know any other way to put it other than, but they are aggressive. So you got, and when I say aggressive, it's aggressive in the fact that you gotta you gotta make sure you're reading the price action properly. And that little close right there is, you know, if this bar would have, you know, if it would have closed way up here, I would have had more confidence that this was probably the last push down. But because it just barely closed outside, it could go either way. So that and the fact that you don't get a really good reversal bar down here. I mean, this thing closed on its low. It opened right there. It tried to go higher and then it backs up and it closes outside where you get the most touches across there. So that's a little scary. But then this one opens inside and closes back near the top. If this would have broke higher right there, and you know, and it gave you a chance to drop a limit order in and get back, because you didn't really, if you when it broke above this one, you could have used a limit order and got right at the high and saved yourself a tick. But if you don't do that, you don't get in this trade and it's gone. And then this was a first entry after this high, but you know after the break of this channel, you're going to push to a new high, and you're probably going to test these highs, and you might even go test the high over here. And so I like, but this is a first entry, and there's a little bit of overlap, so that's why I drew this one in green. And then there's a failed second entry short here, so I like this one to the upside. But the reason that I made this one um, green right here is because it's so close to those highs. There's a good chance it does just what it did there. Okay, it just seems like I can't get through this chart lesson. I had another interruption there, but I can't remember what we were talking about. I don't even know where we were, but there was a second entry long here. I put it in green because it is so close to that high. Even though I felt pretty confident we were going to go higher, and I took that trade, one of these trades myself, I still marked it in green, and it is a little bit. I mean, you're pushing it when you enter that close to the overnight highs because there's a good chance it does just what it does. It breaks low, it breaks out, and of course it got enough to get its scalp, but that doesn't always happen, and then it pulls back. So I hope that's clear. But that's why I marked those two in green. This one was a first entry. There was a second entry here, but I don't like it because it's a doji, and it's right there at the high, and it's a tick away from that high. But when it turned down again, um, I liked it there. I think you do have to use a limit order, and just to make sure you get out. But that's what I saw, and that's pretty much all there is. There's not much more to talk about. There's only one, two, three, four really good setups, and the rest of them are all either aggressive or a little bit iffy, or they're setting up in congestion or whatever. So um, generally, that's a good sign. If you enter like right here, I mean that's really bearish looking. It's a two-legged pullback to the EMA, but we had a break outside here, and the new low, but still that's so close that you might take that trade. So if you did take that trade again, and it still looks really bearish here, but then it breaks lower and it starts climbing. And so it ended up closing back down. So it gives you a freebie to get out of this thing. When you see that happening, um, sometimes, I mean, if it's a strong trend, you might want to re-enter, right? Or you might want to add on or even re-enter or enter there, because that would be a second. It was actually a second entry short when it broke lower, when it went higher and then turned lower. Um, but the way we've been lately, that this thing keeps bouncing off lows, that's a reason to exit. And it even came back and gave you another chance to get out right here. And I talked about that yesterday about how efficient this market is. And it'll do that. It'll give you a chance to get out. So if a trade doesn't do what you expect, a lot of times, put your stop at break even or try to get out at break even or break even plus a tick. Just try to get out. And even if you're right, and you probably match, you say, "Oh, I had it right," but generally, when you get it right, trades take off, and you don't have any problem with them. It's when they don't take off, that's the ones that are suspect, and they make me, a little nervous. And lately, it's had me even confused. But I tell you one thing I've learned lately, that if it's fooling around down at the bottom, and I'm not going to let it back up much. I'm either going to take what it'll give me, um, or and run for the door, because it's just not worth hanging on, because next thing you know, it's way up here. And you see, even then it came back and gave you a chance to get out. But what if it doesn't come back? And sometimes it won't, and then you sat there and lost. But even though it comes back here, if you hold out to ride this to the top of the range, thinking, oh, it's going to be a range day and it'll probably come back, then you're letting this thing go against you 4 or 5 points, and then it comes back and you're only getting a tick or two out of it. That's not worth. I mean, you just don't want to ride out something like that. And that's why I say don't give it more than 2 points. I'd rather lose 2 points on a couple of losers during the day than to risk that to only get 4 ticks or even 1 tick, or that it may not even come back. It's just not worth it. So keep that in mind. Always stick to your 2 point rule. Generally, you do. If you're entering long here, your stop goes below the low of the swing. If you're entering long here, it'd be below that swing. If you're entering long here, it'd be below that swing. If you're entering short up here, it's above that swing, then above that one, then that one. That's where your stop has always got to go. And the reason is, look at it. If you entered here and you were a little early, it took it a while to work down, but as long as your stop was above that signal bar, it never went higher and you never got stopped out. So there's a reason we do it that way, because the price action protects your stops. And so, if you're entering and then tightening your stop before you're getting your 4 ticks, a lot of times you're just going to get stopped out on a good trade. So um, if you went short right here and you tighten your stop, you got stopped out only to see it go exactly where you thought it was going to go. So keep that in mind. And that's really about it. That's probably more than I thought we'd get out of this. Almost 20 minutes today, but just not much happening. And we're at these all-time highs, and I just think people are really nervous up here. And there's all these people trying to catch these tops. So when it does start going lower, they just all pile in and they all exit. And I think they get a lot of people trapped to the long side, and then they all start exiting. But draw your trend lines, your short-term trend lines, and follow the price action. And don't give it a lot of, don't give it more than 2 points. I don't want you to confuse that, because when I say don't give it a lot of room, you got to keep it. your stop where it belongs, which is above or below the low of the swing or the signal bar, which is that's usually going to be the signal bar, but not always. So sometimes your signal bar may not quite be the high or low of the swing, but that's still where you got to put your stop if you want it to be at the most logical place that you're going to survive the trade. So going to call it a day on that one. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.